All right, we'd like to thank everyone for joining us. The PayAssist webinar, the top 5 merchant services nightmares. So excited to have you here. And we've got Bobby Padilla there. Bobby, how you doing today?
Incredible. Happy Halloween, everybody.
Bobby, the way you're looking, you're one of my merchant services nightmares.
Hey, we just had a Halloween party, so, you know, I'm ready to take on the town, have a good time today.
I love it. I love it. Okay, so we'll get started. Again, Bobby Padilla, glad to have him here. He is one of our top associates here at PayAssist. And again, it's a wealth of information.
That's really me here. I do dress up, so.
Yeah, there you go. Yeah, absolutely. And my name is Tom Nakane. I'm the National Sales Manager here at PayAssist. So what we're going to cover today is a little bit of industry background, help you better understand your merchant services statements, teach you how to calculate your effective rate, and again, cover the top 5 merchant services nightmares and how to get rid of them forever. So Bobby, you want to go over a little bit of an industry overview?
Yeah, definitely. We're going to go over the industry for some of the newer merchants on the phone. And here are the stats. Did you know that the average merchant services effective rate is 3%? Yeah, that's your actual rate. There were actually 8 million businesses that accepted credit cards in 2010. By 2018, that number went to 12 million. So we can see there was a 50% increase. And let's look at the 6 trillion number. That's the number of purchase volume last year. The 180 billion was actually the fees that was paid to process credit cards. So if you're a CFO or controller on this webinar, ask yourself, how much did I contribute to that figure? Some more additional industry facts. Credit cards, they originally started as a business to consumer. So if I went to a restaurant, I would pay with a credit card. There are now more businesses that are accepting credit cards, and they simply want the rewards, they want the cash back. And what's happening right now with paper checks are eventually going away. So we can see that merchants don't not only want to accept credit cards, but they feel that they need to accept credit cards. Top 6 acquirers, and just for you guys who don't know what an acquirer is, if you do accept credit cards, it gets processed in an inquirer bank. It's the same as an inquirer. And there are 6 top acquirers. Number 1 is First Data, 2 is Chase Payment Tech, 3 is WorldPay. They actually merged with FinTech. We have Global Payments. They recently merged with TSYS. Elevon and PaySafe round out the top 6. So if you are processing credit cards, let's go to the next slide. There's a 95% chance that you have one of those 6 acquirers in your association. And the top 3 acquirers actually process 4.7 trillion out of 6 trillion. So there is a lot of money. The credit card industry is up there with real estate and retail life insurance. And just so you know, the processor, if you're accepting processor, it has to go first through a processor / ISO. You are not really able to go through an acquirer first. The acquirer is considered the back end, and the processor / ISO or independent sales organization is the front end. There are thousands of processors / ISOs, but there's only really a handful of acquirers. Next slide, Tom. Merchant processing fees. So how much of your money do they get? Well, did you know 81% of your fees go back to the issuing bank? Is that crazy, Tom? How can that be? I thought these made all the money.
Yeah.
I thought the acquirers made all the money. No, it's the card issuing banks. Couple of notes. the card issuing bank also double dips. So they not only do they take the fees from the merchant, they also make money off the interest revenue they make on the cardholders. Let's go to the next slide. Oh my God, merchant statements, man. Who wants to analyze all this? Just so you know, merchant statements, they're confusing to read. And if you are accepting credit cards, you may have something very similar or something very different. All processors have many different layouts. So we're going to clarify on your statements, you know, the reality and what's the confusing part of the statements. 3 examples on the far left is First Data. In the middle is a WorldPay statement. They've actually partnered with Co-America Bank. And then we have on the right is a TSIS statement. So yours may look something similar to this or maybe totally different. And speaking of difference, Tom's going to explain the difference between
I'm different,
types.
Bobby. Is that what you're saying?
Exactly. Yeah, you are different. You are definitely different.
A little bit. You know, if you're like me, when you take a look at a statement, sometimes your head can get spinning when you see all the numbers, especially when I first started in this industry. So when you have rates and fees and transactions, all these things going on, ultimately there's one number that's most important. At the end of the day, the only number that matters is what you actually pay to process credit cards, and that's your effective rate. So you may have, when we talk to people, I've got a great rate. My processor gives me a really low discount. Well, is that your rate or is that your effective rate? So the effective rate is whatever rate you pay plus any fees rolled in together. So you get a true picture of what your actual costs are. To find out what your effective rate is, we've tried to simplify things. Step 1 is go to your statement and take a look at total charges and fees. There should be a line item there somewhere in your statement. Again, this is the total that you paid to your processor for the month. Step 2 is take a look at your total sales volume, all of your MasterCard, Visa, Discover, and if you have Amex on that statement, Amex also rolled in. Step 3 is you want to divide the total fees paid into your total sales volume, which will equal your effective rate. So again, this is the most important number that you're going to be dealing with because that's what you're actually paying from month to month.
Yeah, that's right. Thank you, Tom. Tom knows his stuff. He's a graduate from Yale, so don't question him on the effective rate.
Not Yale, but Hogwarts.
So let's go over the First Data Fiserv statement. You may have a statement similar to this. The smaller section is the front page, and it shows how much gross sales this merchant did. We've highlighted the fees, $6,587. You take the difference, that's what's funded, the difference. So off the bat, it looks like they're getting an effective rate of 2.75 when you do the math. However, is that the real rate they pay, Tom? Is that the real rate they pay?
Well, it looks like it is it?
It looks like it is, but First Data, they're a little bit tricky here. If you do see anything on page 2 or 3 that says pending financial charges, that's the actual fee that you pay for the month. In this example, it's actually higher. It's $7,738. So when you do the math in this example, the effective rate comes out to 3.25. Just so you know, the fees on the front, on the top graph here is for the prior month. So again, if a processor knows that you're not paying attention to your statement, you can easily paying more than you are. So more example.
I think one of the key things is there's no reason to do this. So they can easily have your fees for that month on your statement for that month. So they just choose to do it this way.
And you have to know how to read a statement. Simple as that. Here's a WorldPay. Now this statement looks kind of bland. And the reason it's kind of bland like that and in black and white is this portion of the interchange portion, well, WorldPay, they have a partner with Co-America Bank. They do this on purpose. This portion of the report is only found in your online reporting. They don't send this statement all together at the same time. Again, why do they do that? Well, they want to keep you in the dark. They've listed the type of cards in this situation that your merchant, that your customers accepted. They show the fee amount and the sales amount, but where are the rates for all the cards that came through? So they don't show the math on how they derived that number. And even if they did show the math, how would you know that that's the correct interchange rate? So again, if you're not paying attention to this, you can be easily paying more than you should.
Yeah, absolutely.
Then we got another, yep, let's talk about this, Tom, go ahead.
Yeah, just to summarize, statements can be confusing. Unfortunately, this is by design. The formats will certainly vary from processor to processor, but some processors will remove key details. They kind of treat you like the less you know, the better. And the reason for them, taking this information out is it makes it difficult for a company to compare apples to apples if they're considering leaving that processor. And so really the key thing you should take away is it doesn't have to be like this. You should look for a processor that provides clarity and simplicity and really good communication, with your statement.
Mm-hmm.
So now we're going to talk about the top 5 merchant services nightmares.
Oh my God, is that the Halloween theme?
Yes, it is. So nightmare number 5, integration problems. Anyone that's ever had to do double entry for data, certainly that is a nightmare. So integration problems. If you don't have integration from your payment processor into your software or your accounting system, that can cause problems. It's very common to overbill clients because payments aren't applied properly, or you can have reconciliation and batching issues. So ultimately, the solution is you definitely want to go with a processor that has integration to your accounting and software system. This will alleviate those problems and make sure that you don't run into any sort of human error when you're typing your data in. So nightmare number 4.
Let's hear the music. Norman Bates.
Chargebacks.
The Norman Bates Hotel right behind us. Okay, chargebacks. Hey, what is a chargeback? For those of you who don't know, it's simply when your customer files a dispute with their bank and their bank actually debits your merchant account's bank for a charge that previously cleared. What we suggest is follow right here where it says processor protocol. If you're in a card not present environment, that means you're taking credit cards over the phone or email. Always ask for what is called the ABS. That's the numerical address verification system, which is a numerical portion of your customer's address plus a zip code. If you're going to enter that information into a virtual terminal, make sure it matches. If it doesn't match, that should be a red flag that it could be a fraudulent. And by the way, there's 3 types. There could be maybe the card was stolen, but there could also be friendly fraud, and maybe perhaps your customer doesn't know that the correct company's on their statement. Maybe your doing business name is different. So there's different reasons, but let's follow the processor protocol. If you're in a card present environment, always see if you can get the customers verify their signature, make sure it's them who's buying the product. You should have an EMV terminal that has the chip embedded in there. If you don't, there are terminals that have a capability with signature capture, so you can capture their signature. It will be stored in the terminal for most good terminals should have it for a couple years. What's also important is the billing and shipping. Make sure you get proof of delivery. That's very important. If you're going to be using some type of carrier like a bill of lading, get the proof of delivery. But take initiative as a customer. Always, take the initiative. Call your customer. You might have maybe the product's defective. Call them up, and maybe you can work something out before they actually call their issuing bank. And you always want to do everything you can to prevent chargeback. So take initiative and fight back when necessary. If you do get a chargeback, look for a processor who's really going to act on your behalf. I'll bring it over to Tom.
Yeah, so nightmare number 3, held funds and processing limits. Held funds can certainly be a nightmare to affect your bottom line. Again, it can, unfortunately, processors can hold funds for days or even weeks. We have an associate here who had her own company before she joined up with us. And she was telling us a story about how just before Christmas, she had a large customer that was paying their annual bill. And she was using those funds to pay the Christmas bonuses for her team. And the charge went through. She was waiting for the deposit, never came. Well, her processor held the funds, not just through Christmas, but through New Year's and then through the middle of January. So all that time she had to put out of pocket all her expenses for her employees, which is fine. But then to make her wait for weeks and weeks to get it resolved is really unacceptable for a legitimate charge. So what can you do to prevent this from happening to you? Certainly communication is key. You want to make sure that you're set up properly, that your processor knows what's your highest ticket that you typically process, how frequently this occurs. And ultimately the key is having a processor that is responsive and has a dedicated account manager or management team that will help you resolve any issues as soon as they occur. Merchant services nightmare number 2, hidden fees.
Oh my God, I have to close my eyes for this one, Tom. Oh my God, hidden fees. Hidden fees. Number 2, hidden and duplicate fees are they're common. I'm going to give you some examples of some hidden fees. There's a batch fee. A batch fee simply is the fee to settle a transaction. Some processors charge the batch fee, some don't. The batch fee is low, but just remember this, every nickel and dime counts, especially for a large business. There's an annual PCI compliance fee. Just so you understand what the PCI fee is that it's the industries, they want to have you take precautions so that no customers are hacking into your customers' credit card information. So if the processor is providing that service, you should be just paying anywhere between $6 and $10. If they don't provide the service, they can still charge you that fee because they can. This industry is unregulated. So look for any type of annual PCI compliance fee or a PCI non-compliance fee. There's a fee to access card brand. I'm going to talk about that in a second, and then the transaction fees also. So again, get clarity on your statement. There are legitimate fees that have to be paid, a statement fee, which is $5 so that we can send you a statement so we can help you understand it. There is a PCI fee if your processor provides that service. And if you're using a virtual terminal, there is a gateway fee to send the transactions to the acquirer. Let's dig into some of these here. First one, fees to access card brand. You can see this is a statement with all the different type of credit cards coming through. You have all the rates. But you look at the bottom here, fees for access to card brand service. Well, hey, if you're accepting credit cards, you automatically have access to the network. What do you think about that, Tom? You already have access, right?
Yeah, $506 unnecessarily charged. $506 for no reason.
You're right. And you can see that there's nothing here. There's no number. It's just a blank hidden fee. Let's talk about a couple more fees here. Just what I said in this example, non-PCI is $59.99. Why are they charging that? Well, they're most likely not providing the service and they can get away with it. I think the next one is a security fee. I've never seen this one before. And look under other fees. Security fee, $79. We help this customer is getting ripped off, especially if you analyze if they're doing this every month. Look at this statement. I talked about transaction fees. Now, some processors charge a transaction fee, others don't. Most processors make their money off a certain percentage off of your volume, but this is unnecessary. As you can see, there's over what, 150 transactions at 10 cents. Again, they are low, but every nickel and dime counts. Same with the batch fee, 25 cents. And then again, in this example, this PCI non-compliance fee, $19. You should be charged 6 to 10 if the company does provide the service. And transaction fees even more. In this example, this is kind of, this seems, if you look at the yellow on the top graph where it says DISC, it stands for discount, the P/I is per item. So it looks like on the surface that this merchant's not getting charged anything for the transactions. But you got to look underneath the iceberg, right? You got to dig deep. And on page 2, where it says authorization fees highlighted in yellow, there was 341 transactions for 34, and it's right there. That is the hidden fee. If you look at the discount on the top where it says percentage 2.5, this merchant's being charged 250 basis points off the volume. High number, astronomical number. Don't believe it. Hidden fees, non-qual, mid-qual. Batch fees is simply, tiered pricing. So if you're not in interchange plus, which is what we would recommend, you're in what is called tiered pricing. At first, it does appear simple. There's only 3 buckets, so it does appear simple. However, there are 3 different categories. The shadier processor will lump all the interchange rates into 3 categories, and the shady ones will fail to determine which tier each transaction falls. So they're making a profit. It's impossible, literally impossible to find out what the true cost of all the cards in this pricing model.
And I think the key thing here is, one of the key things here is non-qual, mid-qual. These are made up terms. So they're made up to make profit. So you should be paying 1 rate, not 3 rates. So
exactly.
This brings us
Number 1.
Number 1, merchant services nightmare.
That's the nightmare on Scarecrow. Dark Knight of the Scarecrow.
Yeah.
Okay.
Yeah. So bad customer service. Bad customer service. Why is this nightmare number 1? Because any payment processing issue can become an emergency. Like it's a 911. Unfortunately, many people don't know who to call to resolve their issues quickly. Many times they get stuck bouncing around in a call center. Many times that call center is overseas. And again, they just don't get their issues resolved quickly. Unfortunately, many processors tie their customers into long-term contracts, which really has helped propel this bad customer service. So because again, when you have a long-term contract, there's no incentive for that provider to give you the best customer service possible every month. So what is the solution? Well, one, again, you want to get a processor that is dedicated account manager who's going to be responsive so that when you have an issue, you're not waiting days or weeks to get it resolved. You get it resolved same day or next day. And then also, you certainly don't want to be locked into any long-term contracts. There's no reason to not be in a month-to-month contract with processors these days. So really the question is, what's next? You've got a lot of information about processors, about the industry, about effective rates, and again, about nightmares and how to resolve them. So what we suggest is to get your merchant services statements analyzed. Look for hidden fees and duplicate fees. Calculate your effective rate so you know actually what you're paying for. Determine if you're eligible for any additional processing discounts based on your industry, such as level 2 and level 3 processing. And again, we're happy to do that for you. You can reach out to us. We'll give you our contact information at the end. But regardless of whether you do it through us or someone else, get your statements looked at. Dive in there. About 95% of the time that we do an analysis, we find that customers are being overcharged. 95%. So again, there's no reason for you not to pay the lowest amount possible every month. and that's what we want to help you do.
Yeah, exactly. And like I said, Tom said 95% chance we can help you. One of my clients, Scott Roberts, he was part of that 95%. He said, hey, I want to have you take a look at my statement, Bobby. And he had other merchants promise him the world. And he liked that I was hands-on. He took a chance. He's been happy. What he likes most about me is that I go the extra mile. Every month I train his company and I make sure he's getting the best possible price. And just as Tom said, as we get close to the end of our webinar, is some of you on this webinar are going to say, hey, yeah, Bobby and Tom analyzed my statement. And if that is you, the next step for you is send the statements. We have our emails here. 1 to 2 months would be great. And we can report to you what we found. Other people on this webinar, the next step for you is, hey, I like the presentation. I want a phone call first before I send you my statement. And we're more than happy to take a call and talk to you about your current situation. You can call us here. Our phone numbers are on the top here. And I'll leave with this. Tom and I and PayAssist, we're going to do, we look at you differently than just a client. We look as if we're putting Bobby Padilla, Tom Nakane, and PayAssist on your team. We're going to do far more than any merchant services provider has ever done. That means if you email us, we're going to respond immediately. If you call us, we're going to respond immediately. Like I said, we're going to do far more than any merchant services person has done. Is there anything else you'd like to share as we end, Tom?
No, I just want to say thanks to everyone for taking the time with Bobby and I today. And again, we encourage you, get your statements analyzed, dig in there, find what's going on. Because again, one of our goals is to help provide more clarity in the industry. Again, one thing that we're striving for is to make customers for life. So if you do decide to get a statement analyzed through us, and maybe even eventually come on board, one of the reasons why we don't have contracts is that we believe in earning your business every day. And whether you go with us or someone else, I think that should be the philosophy you're looking for. So thank you very much for the time. I hope everyone has a great week. And again, feel free to contact us if you have any questions.
Great. Happy Halloween, everybody. Goodbye.
Yep. Happy Halloween.